This edition of the Ridley Report is brought to you by PortCityCoin.com.
This is a roughly 20-minute long series of recent articles from Crypto Insider. Dave Ridley has obtained permissions from Crypto Insider to upload audio versions of the articles on the Ridley Report, so you can learn about alternate currencies while eating or driving. Ridley doesn't necessarily endorse the opinions expressed in the articles. Daily Roundup, November 16, 2017, posted by Kyle Torpy. Over on Twitter, Chris Ellis has indicated that Bitfinex, which is the world's largest Bitcoin exchange by volume according to CoinMarketCap, will roll out SegWit support next week. Over on Reddit, longtime Bitcoin Core contributor Peter Weil has said he thinks it's reasonable to say that there will be a concrete proposal and implementation of Schnorr signatures in 2018. According to Reuters, European Central Bank Governing Council member Yuval Nalatny has said that central bankers are considering new cryptocurrency regulations similar to what China has already done. According to Reuters, Mt. Gox customers may get burned again as former CEO Mark Karpels is expected to walk away from bankruptcy proceedings with cold, hard cash. According to Axios, a new survey has shown the average price a current Bitcoin holder plans to sell their coins at is $196,165. End of article. Start of new article. Karpels proposes ICO to revive anarchists. What do the creditors think? Posted by Daniel Dalton. Vertical line, November 18, 2017. Mark Karpels estimates that $245 million USD would be required to revive anarchists and proposes an ICO as a solution. The question on everyone's mind is surely, why would anyone do this? More importantly, what do the creditors think? Background for new entrants to the crypto space. Anarchist was arguably the largest cryptocurrency exchange right up until cracks starting to show in mid-2013. By February 2014, the exchange folded due to a plethora of exploited security flaws that had gone unnoticed. Trading was suspending and all services were halted, and it filed for bankruptcy protection from creditors. Approximately 850,000 Bitcoins were declared missing, valued today at $6.6 billion USD. At a later stage, 200,000 Bitcoins were discovered in a forgotten wallet, which is the foundation of the ongoing insolvency process. For anyone not familiar with the scandal, you can read a full summary here. If you want a technical post-mortem, you can check out this insightful talk by Kim Nelson, WISEC chief engineer, which took place at this year's Breaking Bitcoin conference. Reviving anarchists. Mark Karpels isn't without humor in his writing, stating that he wouldn't have anything to do with anarchists anymore, which most people would agree is a basic requirement should the fundraising be successful. Even if we were to entertain the idea, the most obvious solution is to use a portion of the rediscovered 200,000 Bitcoins to handle fundraising. Karpels is quick to address this, albeit ambiguously. Some people may think, why not just use part of the 200 to 1,000 BTC held by anarchists? And I'll stop you right there. The plan where those assets are used would never get through all the loops it needs to go through to be approved. so that's definitely out of question. The idea would be to keep the trustee around to have those assets secured, what we call non-dip civil rehabilitation. Dip meaning debtor in possession. Basically that means the debtor, MTHOX, is not in possession of the assets or have MTHOX form a trust for the purpose of managing the assets backing the JOX coins might be cheaper on the long run. Basically, the funds are purportedly locked behind a wall of bureaucracy and red tape. What do the creditors think? This proposal by Carpels should be framed in the interests of those who were directly affected by the MTHOX scandal. /r/MTJOX Insolvent Key is an active subreddit dedicated to creditors of MTHOX who want to follow up with the formal MTHOX insolvency process being run out of Tokyo through the Japanese court system. What do they have to say about a potential ICO? Understandably, there were some negative reactions. Got to say I don't like that plan because I can't imagine any rational person/corporation spending $245 to purchase MTHOX. /u/Seneca7. Instead of farting around with starting new companies, I'd just prefer my $1 million in Bitcoins back. /u/JMLAV8. But surprisingly, the proposal was received positively by some. What if there is a person/corporation willing to spend $245 on MTHOX? While you then like the plan? What is wrong with pursuit of this plan alongside the existing directions? For what it is worth, we should not discount the possibility of an MTHOX revival. /u/Freedomit. One user hit a nail on the head with their thoughts. Although I have pretty mixed feelings about seeing MTHOX alive again, any effort that will speed up current situation frozen creditors claims is welcome. AFAIU if Mark finds some investor has to get $245, bankruptcy process can be easily cancelled and remaining Bitcoins proportionally distributed among creditors. Major question here is why would any investor do it? Only reason I can see would be someone really loving MTHOX brand and wanting to see Mark Carpels personally to run his/her business. /u/Jim Code. At the end of the day, people have been owed large sums of Bitcoin from MTHOX for over 3 years. Support should be given to any proposal that leads to a faster and fairer resolution on this already overdrawn legal process. However, the question goes back to, who would actually do this? Reinstating Carpels is certainly not on the books, and I don't imagine anyone has any attraction to the MTHOX brand name. Considering the ever-growing severity of the situation, Carpels concludes his post on an unusually whimsical note. Should anyone have $245 million USD sitting around and want to purchase MTHOX, just drop me an email. End of article. Start of new article. Have digital currencies really stolen Vladimir Putin's heart? Posted by Tim Halper. Vertical line. November 28, 2017. Have digital currencies really stolen Vladimir Putin's heart? If you're talking economics in Russia these days, you won't be able to avoid the matter of digital currency. Leading online Russian news agency Lenta.ru economy lead on November 28 made no bones about the issue. What will help Russia escape its oil dependence? Asked the headline. The vaunted solution, digital currencies. Yet, despite Vice's recent assertion that Russia has gone all in on digital currencies, the Kremlin continues to deliver mixed messages. On the one hand, government officials will not stop berating digital currencies, claiming that they are the tools of money launderers and terrorists. But there are also signs that Russia might just be on the verge of embracing digital currencies on an unprecedented scale. Cause for concern. Where does the negativity stem from? Well, for a start, the country's central bank recently warned of serious concerns over the risks of digital currencies, claiming that terrorists can exploit them to their own ends, and berating the highly volatile nature of the cryptocurrency market. Officials have vowed that they will issue a comprehensive set of regulations before the year is out, and the Duma's head of Julian said in September, in a country where millions have suffered from pyramid schemes, we should not allow citizens to sell their apartments to make cryptocurrency investments. Last month, the central bank even said it would move to block access to online digital currency exchanges, and called Bitcoin and other currencies dubious. Glass half full. You could argue that shutting the door to digital currencies makes no real sense to Russia, a country that is quite publicly trying to find ways to reduce its well-publicized dependence on selling oil and gas. Many claim that digital currency mining presents countries like Russia with a massive opportunity. As energy prices remain so low in Russia, Vladimir Putin and his aides are no doubt casting an eye at former Soviet states like Georgia, whose state-run Bitcoin mining center is now the envy of all Central Asia. This success story appears to have them. Why aren't we doing something like this? Russian miner coin, a venture that Bloomberg claims is run by one of Putin's internet aides, is proposing to do just that. Dmitry Muratov, Russia's Internet Ombudsman of Russia and perhaps the most influential digital currency advocate in the country, has claimed that Russia has the potential to reach up to a 30% share in global cryptocurrency mining in the future. Ethereum excitement. Much has also been made of Putin's recent meeting with the 23-year-old founder of Ethereum, Vitalik Buterin, with the Kremlin's official website recounting that Buterin spoke about the possibilities of using the technology he had developed in Russia, and adding that the president supported the idea of establishing business contacts with potential Russian partners. The country's banks also seem very keen on Ethereum. Bank DB announced it had begun work on an Ethereum-based project back in August, with Buterin himself turning up to sign an agreement with DB chiefs. Meanwhile, another leading Russian bank, Sberbank, has recently joined the Enterprise Ethereum Alliance, whose members also include the likes of Accenture, Deloitte, Intel and Microsoft. The alliance was created in February this year, and aims to apply blockchain technology to real-world business situations using Ethereum. Some believe that digital currencies provide Russia with a way to sidestep Western sanctions in business dealings, by disposing with the need for offshore companies and utilizing a minimum of intermediaries. And then there is the much-vaunted Bitcoin City project. This ambitious venture could see the government set up a state-run megacity Bitcoin mine, Georgia-style. The site is an as-yet unnamed Siberian city, possibly near the Chinese border, where it could increase the influx of business tourism. hybrid approach possible instead of loosening the reins or issuing a China-style government crackdown. The Kremlin perhaps wants to take a hybrid approach to digital currencies. Putin, it might be argued, seems happy to let digital currency-based enterprises thrive in Russia onto conditions that the government knows about them, and that Moscow takes a cut. Take, for example, the Kremlin's proposed cryptocurrency mining legislation. If passed, Russian miners would be able to continue their activities unabated, so long as they paid taxes on their earnings. No doubt, Russia has massive competitive advantages when it comes to potential Bitcoin mining. As mentioned above, power is cheap, especially in rural areas, and much has been made of the possibility of placing mining data centers in some of the coldest parts of the country to solve overheating problems. Energy prices in Irkutsk, for example, are 5 times cheaper than in Moscow, the reason why many of the country's Bitcoin miners have already set up shop in this Siberian city, and why Irkutsk residents are now using mining software to pay their utility bills. Crucially, the central bank's deputy chair and head of blockchain technology Olga Skorobogatova spoke during a recent televised interview of imposing mining taxes. Skorobogatova stated that these taxes would apply to both individual miners and to private mining ventures. There is also talk of regulating rather than banning initial coin offerings ICOs, another sign that Russia sees digital currencies as a potential money spinner. Guarded stance. Only time will tell what Putin's digital currency policy is. The chances are he is happy for the rest of the world to remain in a state of confusion regarding his true motives. And with so much at stake, perhaps he believes playing his cards close to his chest is the smartest move he can make right now. But for a country that seemingly has so much to gain from digital currencies, it is hard to imagine Putin ordering a Beijing-style clampdown. As Lenda Ruthenium Jaeger Polankov speculates intriguingly, who knows? Perhaps Russia's rich are already converting their money into digital currencies. Next article follows. Daily Roundup, November 28, 2017, posted by Kyle Torpy. Vertical line, November 28, 2017. According to South China Morning Post, China's Bitcoin miners have made plans to move overseas due to the possibility of Bitcoin mining being banned in the country. According to Forbes, the Bitcoin network now processes $1 billion worth of transactions per day, which is a tenfold increase from January of this year. Over at Bitcoin Tech Talk, Jimmy Song has published an explanatory article regarding the bugs in the code related to the Segwit2x hard fork. According to Bloomberg, some doomsday preppers are starting to switch from gold to Bitcoin. According to Cohen Journal, the path towards better privacy in Bitcoin has become clearer, but it will still take time for the situation to improve.
Rare coins, pawns, gold and silver bullion. Check out Port City Coin in Portsmouth, New Hampshire for your precious metal needs. A+ rated with the Better Business Bureau. Happy to do a cash transaction. Why buy your metals from one of those slave state mints when you can support the free state economy? Visit portcitycoin.com, or as I like to call it, portcitycoin.com.